So with that, I'm going to ask the panelists to come on board. I'm going to introduce Quentin Hardy of the New York Times, and we'll get going. Thank you very much.
Thanks so much. Please refrain from being sedentary for the next 40 minutes. So, the theme here is disruption and innovation. And disruption is a term we love dearly here in the Silicon Valley and the tech world. Obviously, bloggers, writers, news people love it because disruption is dramatic change. And, well, that's news, and that's drama, and that's shock, and everyone readjusting. And that's interesting. And the tech industry likes it because they get to seem like bold visionaries changing the future remarkably and resetting everything and changing all the rules. And also, it does happen to a large extent to be true. I was just talking with Jeffrey before we came on, and he pointed out that disruption gets to be baked into this industry in a way that is in no other because of Moore's Law. You're just sort of getting an eye on a dramatic change that's going to happen in process at really no cost to you for the most, unless you're Intel. At really no cost to you, you get to see this coming, and you have it ready-made to you. But of course, all that said, disruption is also a somewhat tired or irksome word that has become almost a marketing term. Somebody was just telling me they were at a meeting where someone was going to disrupt the mattress industry. Well, there's something that people do every 10 years, and it more or less works. I'm not sure it needs to be radically restructured or how much it would shake the world if it was. But even more to the point, the thing about the future people lose sight of is that it arrives consisting 99% of the past. Unless the Earth gets hit by an asteroid, there are pre-existing conditions into which all change occurs and adapts. Infrastructure, alliances, cash flows, work, processes, you name it. And any disruption that takes place is a dramatic innovation, if you will, that resets some of those, but shouldn't affect all of them. And some are adjusting, some are forming new alliances, some are up, some are down. But the innovation, the disruption, happens inside this context. And that creates this very interesting flywheel because the past should be respected and should be adapted. The disruption creates some change. But, sure as day follows night, the disruption then becomes part of the incumbent process as well, with its own cash flow that affects how it's going to behave, and with its own alliances that it can or can't change, but it's largely dependent on, with its loyal customer base that it wants to keep loyal by not presenting things too differently. So the question I want to put to the audience to start this discussion off is, how do you balance in a healthy way seeking a healthy relationship with the legacy, a healthy kind of innovation, and also a recognition of disruption and how people have to change their behaviors or systems have to change. And we have people from very different backgrounds. I'm going to ask them to introduce themselves and talk a little bit about their company. I'll start with the one that needs the least introduction, Pat Gelsinger, but then we'll proceed down the line to address that question of innovation, disruption, and legacy.
Very good. Pat Gelsinger, CEO of VMware, now my 35th year in the tech industry. I started when I was 10. Right, I keep pushing that year back. Maybe before I get into my answer specifically, I do want to just, since this is part of our launch event today that we'll be going into later, just express our deep appreciation. Obviously, Quentin, I've known you for many years. Thank you for being our host today. Jeffrey, we've known each other for many years. Thank you, and I've greatly appreciated your wisdom. And obviously, I have my two new friends here today, Casey and Renaud. So again, thank you for joining us for the VMware launch event today. When I think about this topic, right, and disruption of any sort, being the technologist, foundation that I've been in for so many years, it really always starts out, we're seeing these incremental changes, right, that occur in the technology, and all of a sudden, right, they get to the point that they become so significant that, as Jeffrey starts to say, they become free. right? You know, we happen to be a profit-making endeavor, so we don't believe in that word free. But you know, they become that the cost dynamics of some aspect of the environment become so radically different that things change. And that might be connectivity, that might be compute, that might be some other aspect to it. And as those occur, right, they kick off these cycles of innovation, as we would call it, that just become absolutely differentiating to what went before. And we do see that we're in this period of, you know, tectonic shifts, changes as we go from client server to mobile cloud. And this is changing everything about how we build applications, how we deploy those applications, how those applications are consumed. But as you properly set up, Quentin, there is this thing of, well, the old to the new, and how do these work? And many aspects of our product launch that we're going into later in the thing is exactly about that. How do we bridge across those two worlds of you know, the dynamics of the old, as well as now how do you embrace the capabilities of the new, not just at the foundational level, but how does it then affect every business who's built on those underlying technologies?
Moving into the specifics, VMware, even a decade ago, not a long time, very compressed, massively disruptive, company comes out of nowhere. You do not want to be a server manufacturer anymore. This is a bad time.
Well,
but
actually,
now,
I was just with Lenovo when they said this is one of the highest margin businesses they have. They're pretty excited about being in the server business.
Triple underline, I was talking to Lenovo. You know? High margin at Lenovo is probably still single digits, right?
I won't comment on their business characteristics, but it is, you know, it causes these major
My point
shifts.
is, though, like, you know, this company reshapes the world, but now you have this monster customer base, and you've got containers, and you've got cloud, and all this stuff that, in some ways, you enabled, but in some ways, changes the process around you. You know, can a big company be a disruptor? Does it need to be a disruptor or an incremental innovator to its customers? And you know, do you feel your core is threatened by disruptions?
Yeah, and we certainly feel that in aspects of our business, you know, there are new technologies. And we have to find ways to embrace them, like containers, like OpenStack, and how we make those part of our value proposition. At the same time, we continue to be a disruptor in new domains, as we're doing with networking and as we're doing with our end user computing and mobility as well. And I think the critical aspect is every substantive company, right, has to be both realizing the aspects that might be disrupting them, as well as embracing the opportunity to be a disruptor. Because every established company is disrupted and a disruptor if they're properly positioning themselves for the future.
That's interesting. What you're saying, in a sense, is the disruption you can affect is more in your adjacencies than in your core, which, yeah, that would logically flow. Casey.
It's hard to follow that, but thanks, Pat, and thanks, Quentin. You know, I'm co-founder and CEO of a national movement called MBAs Across America, which in essence started as a crazy idea of three classmates and I at Harvard Business School in our first year, which was, you know,
that's a good idea. Start crazy.
Exactly, which was Harvard Business School is this old incumbent, and it, you know, sort of, as James Carville would say, in some instances, reeks of yesterday. And so, what if we got out of classrooms and cubicles and went out across the country to these places in America that were grappling with a lot of the questions that you all are working at the forefront of, and use these things called MBAs that we were spending a lot of money for that purportedly make us really good at business, to see if we could help entrepreneurs in the heart of the country actually build businesses that could not just create jobs but change lives on the ground. So I approach this conversation less so as a technologist, but really through, I guess, three lenses. The first is sort of an academic lens, right, of showing up to Clay Christensen's class on the first day, and the first thing he says very slowly and painfully is that I wish I used another word.
It would now be a marketing term, whatever you picked.
Exactly, which after, you know, Jill Lepore's, you know, attacking him, I'm sure he wishes even more so. So there's that lens of the academic sense of, yes, absolutely, some of the things we've talked about are not really disruption. Less important than that, though, I think about is the second lens of just the practical, realist, cultural lens of the fact that in my generation, the millennials, disruption, not the academic term, not the technological term, but disruption in the literal sense has defined our entire lives. I mean, every institution, everything that would have been considered status quo when we were born has been compromised, has failed, whether it was the global economic crisis. I was an intern at Lehman Brothers, whether it was Washington, D.C. I was in D.C. the first year of the Obama administration, whether it was 9/11. I mean, everything we've seen has been, in a way, totally changed. And so now it's not so much about a sort of clinical exercise of understanding disruption. It's a matter of the fact that our lives and our world and the things that we took for granted don't exist anymore. So what do you do?
I never really thought about it that way. That's kind of nervous-making, isn't it?
Well, well,
as a spokesman for your generation.
Well, you know,
how do you guys sleep at night?
Well, we don't. We don't. But that gets to the third part, right? Of the third thing. This is like great makeup this morning. The third lens of the human lens, right? I mean, regardless of what we say academically or practically or really, you know, the human element of disruption, the cities that we go to, we've sent 32 MBAs to 27 cities across the country, from Detroit and New Orleans to rural Montana, Tupelo, Mississippi, places that now the city is the incumbent that is being disrupted, right, that is trying to adapt, that cannot go bankrupt, or they can go bankrupt, but they still have to exist, right? So we're sending folks to these places that are rising business leaders, and we're going to places where entrepreneurs are using the fact that you can now build a great technology company in Fargo, North Dakota, to try to create jobs. But there are a lot of folks being left behind. So there's this human cost of disruption that we're seeing. There's a really great, extraordinary potential of disruption that we're trying to support entrepreneurs in doing. And then there are these MBAs who will be more likely than not the CEOs of major companies that will either be disrupted or will ride the wave of opportunity.
Are you in touch with most of these guys? Have you been to most of these regions where your MBAs are working?
Been to the vast majority of them. We were in Detroit the week before it went bankrupt.
Right.
We were in New Orleans 8 years to the day of Hurricane Katrina.
So what's it like for the MBAs to witness that human cost? Because when they're in the classroom, it's like, yeah, disruption, great. This is how great fortunes are made. You know, standard sort of the Hayek, you know, classical,
yeah.
You know, need that shock. The market is cleansing this. But then they've witnessed the human cost of the invisible hand just ripping through something.
Yeah.
What's the effect on those people?
You know, to be honest with you, I had a conversation with one of our fellows that went to Stanford Business School. And at the end of her journey, she said, you know, this restored my faith in business.
Really?
But that came out of a lot of depression, honestly. They went to Detroit. And if you go to Detroit, there's this whole conversation of, well, tech is going to be the future of Detroit, and we're going to put $1 billion into downtown. The fact of the matter is that Detroit is a city of 700,000 people, 85% of whom are black, 65% of whom are under the poverty line. I'm not entirely convinced that it's going to be a tech resurgence that's going to get us the whole way there, although it's important. So I think the MBAs feel, in some ways, a bit short-shrifted by their schools, that they have not exposed them to the reality on the ground.
They weren't humanized.
You see. And I think also they have a bit more, humility in terms of their brilliance and ability to foresee the future and the possibilities.
That sounds exceptionally valuable. What you got, Patrick?
Right. My name is Arnaud Laplanche, the founder and CEO of Lending Club. So Lending Club is a credit marketplace. So where the innovation comes from there is we operate as a marketplace. There are investors on one side, so providing the capital for providing credit, and borrowers on the other side taking loans. And the loans are facilitated by Lending Club. And it's a really big departure compared to the traditional bank model, where a bank would collect deposits and turn around and make loans and go through a process of transformation of capital that really involves sort of thousands of branches, tens of thousands of employees. So because we operate online and because there's this very streamlined process and flow of capital directly from investors to borrowers, we're able to automate a number of processes, operate without a branch network, and really achieve a massive cost reduction compared to the traditional system.
So do the banks like you or hate you? Because most of them are credit providers as well as loan providers. So
that's right. So I think that's where our approach is a bit unique, in particular compared to other Silicon Valley company. So we believe innovation doesn't have to be destructive. It doesn't have to be confrontational with the incumbents. So we've had this, really this approach of partnering with banks. And really all that matters to us is to make credit more affordable and more available to consumers and small business owners. And we'll do that any way that works, that makes sense. So when you think of the banks, there are things we do well and things we don't do that well. And same with Lending Club. So we're highly automated, fully online. So we have a very low cost of operations. But the banks have a very low cost of capital. And so what we found a couple of years ago is that the best possible combination is actually for banks to participate on the platform. So instead of being completely disintermediated, a lot of banks now come to us and say, okay, we'd like to be a participant on the platform, and we'd like to put our capital to work and help make loans to our customers through the Lending Club platform, as well as to other customers we don't currently have. And when you put together the low cost of operation of a technology-led innovator with the low cost of capital of the incumbents, these two things together help drive down the cost of credit for the benefit of.
What was the disruption that made you possible in the first place? What was the change you saw that said, well, we need to move. This is let's go fast. Somebody's going to do this.
Well, I think what really gave me the idea of Lending Club was a day of 2006 when I opened up my credit card statement and realized that I would be paying 18.99% interest rate on my credit card. And then the next piece of mail I opened was my savings account statement, where I was earning 0.5% interest rate.
But
so
with respect, people had been screwed by their banks for decades. This was not like a major change. What had changed? Was it just a level of connectivity, a comfort with doing transactions online, an ability to scan risk better? What did you see that?
I think it's all that combined. It's people becoming more tuned to the idea of entering into financial transactions online. It's more data being available, more APIs allowing us to share data, access data that helps enhance the underwriting. It's also, quite frankly, the financial crisis of 2008 I think changed the way people think about their finance and think about what's safe and what's not. And a lot of things we thought were safe before 2008 appeared not to be so safe. And
there'd been a psychological disruption, in a sense, that created an opportunity to create a new argument for yourself.
That's right.
That's interesting. And at what point will you be a tired old incumbent? What's your metric for boredom? I mean, who disrupts you?
Well, I think as long as we can continue to innovate and provide a better service and a better product to our consumers, we'll be the technology innovator and we'll be the technology leader. But it's the key of all of this to continue to operate at a low cost and continue to innovate and bring great products to market.
I wasn't suggesting this was happening tomorrow, by the way. How big are you compared to the industry? There's probably a lot of running around.
Yeah, you got a long way to go.
Yeah, no, that's one of the amazing things. So compared to the mattress business, consumer credit is a big industry.
Yeah, right.
And it's something
that doesn't happen once every 10 years.
That's right. It's something that touches everyone. I mean, when you think of us as a marketplace with investors and borrowers, I mean, everybody in this country is in either one of these two situations. Either you need money or you have money. So everybody can be a customer.
Either way, you want to encourage the velocity.
That's right, and so right now we are facilitating over $1 billion in loans every quarter. That's a tiny drop in the bucket compared to the size of the consumer lending industry, which is trillions of dollars.
And I was saying part of the challenge, if you will, is you create a disruption, but it also creates a business that has relationships. And those are hard to shift. That's what makes people get disrupted down the line by a new change. They have to respect their relationships, which are the source of their cash flow and their organizational behavior. What are your key relationships in how your business runs?
Yeah, so I mean, investors on the Lending Club marketplace make 3 to 5 year loans. So it's a big commitment, a long-term commitment. The behavior we've observed is they reinvest constantly, and many of the investors now invest through a retirement account. You can invest through a self-directed IRA. So it's really sort of their long-term retirement money that's not going anywhere. So it's extremely sticky to use a asset manager.
Sticky. Yeah. Okay.
And even on the borrower side, I mean, we've seen many of our customers, especially on the small business side, really sort of coming back to us for their financing needs over and over again.
Mm-hmm. Now, Jeffrey, I'm shooting from the hip a little bit, but you've studied this, written about this, been at companies where they're going through this. Are there rules around disruption, innovation, and legacy?
Well, I'm a frameworks guy, as you know, so I'm always trying to come up with a framework to explain what's going on. Hey, good to see you again. So, so I would say that disruption, the framework I'm playing with as of lunch today it's like trying to start a fire, okay? So I've got 4 pieces in starting a fire. I got wood, paper, a match, and then I got to have some people to bring extra wood. So I think the wood that starts the disruptive innovation fire is trapped value. So whether the trapped value is talent that's trapped in Detroit, whether it's CPU cycles that are trapped in 1 to 2 year servers, whether it's money in banks that can't get out and people that need it, somewhere there's trapped value, and if somebody could release the trapped value, that will fund the disruption innovation, typically at a very, very fast rate because trapped value wants to escape quickly. You then have to have something to release the trapped value, and as Pat was alluding to, I think it's when technology creates a net new free resource. For me, the big free resource of this decade is what I'm calling systems of engagement. It's basically mobile phones everywhere for free, connected by Wi-Fi everywhere for free, going into cloud computing, which is not free, but compared to its predecessor, is an incredible discount. Wouldn't you re-engineer a bunch of business processes if you had that capability? So that says, okay, I've got the firewood of the trap value and maybe the crumpled up paper of this technology capability, but I still have to light the fire. And that's the match, and I think that's the innovator. I think that is the entrepreneur. I think that's Casey. I think it's Renaud. I think it's Pat. I think it's anybody who is willing to bring the energy and the commitment to start that fire. And then finally, to your point, Quentin, which is, I think you see a lot of these fires start, particularly in this valley, but a lot of them flame out too. It's like they lit all the paper and it didn't get going. And you have to have people bring more firewood to the game. And I think what that means, that gets back into your thing about alliances and ecosystems and partners and customer bases, because you're only as powerful as your ecosystem. And the challenge for the incumbent is sometimes your existing ecosystem is threatened by the disruptive component. That makes Pat's life a lot harder. Renault's life does not have that problem.
At least not yet.
Not yet. But your first move forward, you're kind of bringing your first ecosystem, so you're not trying to overcome the inertia of your past ecosystem. But to Quentin's point, I think eventually past and present have to come together. And so the good news here is I love William Gibson's statement about the future. He says the future is already here, it's just unevenly distributed. That's how you play this game. In the places where the future is happening now, you must recommit to the new ecosystem. You cannot try to protect your existing ecosystem against a future that's unfolding. But there's a lot of parts of the globe where the old ecosystem is just fine, thank you very much. And so staying with that and serving that part of the world with that. And then there's other parts of the world which are already well over the hump and down the road, and then keeping up with those. And so that's a challenge. I've been spending a bunch of time with companies of Pat's size and perhaps larger, and that's a big challenge to get your company's head around that, your customers' head around that, your partners' head around that. But I do think it's the gift that's going to keep on giving. And I think this systems of engagement infrastructure for re-engineering the world, we haven't even touched healthcare yet. We haven't touched education yet. We haven't touched citizen services yet. I mean, we've got a long way to go. There's a huge amount of trapped value that I think we can release.
Are there companies, really big ones, that have figured out how to turn this into a process inside their company?
I think process is way too strong a thing. I think it's the CEO's culture. I mean, I think Mark Benioff at Salesforce has got a bunch of this stuff. I think the fact that Microsoft's stock price has gone up 50% in the last year is because people believe Satya may have some of this stuff, and I think they were pretty convinced that Steve did not. And so I think if you're willing to put yourself in service to the world, I think the world at the margin will give you the benefit of the doubt, at least get you into the game.
So you're saying it's charisma?
I think it's culture. I mean, look, I don't know that...
Satya didn't come in and change Microsoft's culture that dramatically.
No, but he changed their public tone of voice. And look, his first act was to put Office on Mac, which is something they could have done significantly before that time.
Yeah.
And I think people saw that. And then look at what he did with the thing about the... He made the gaffe about the women. And then he said, I was wrong.
He owned it.
He owned it.
Yeah.
And you start going, wow, that's a very different cultural stance to the world than the one we were used to. And so therefore, I think part of the new ecosystem says, let's go with that. And part of the old ecosystem is reassured, thinking maybe you're not going to become a dinosaur. That's very encouraging.
Mm-hmm. I think one of the, I think it's so critical from our standpoint, to think about the role of the leader in this. I think there is a lot of hero worship of leaders, but what you're talking about, Jeffrey, is how even small changes from leadership can really change this. When we first started, we were very sort of anti-HBS. We would go across the country and basically just, try to get in the news by saying that we are the anti-HBS, right? And then we said, okay, well, we want to try to create a generation of business leaders that's essential force for progress. We've got 32 people in our program. The top 50 business schools have 35,000 people. So we probably at some point are going to have to engage them in some way. It's the same conversation we saw Perry Chen have at Kickstarter. He said, they wanted to sort of lure him into this anti-NEA thing. And he was like, we're not doing what the NEA is doing. We need to partner with the NEA to support it. Great conversation that Elon Musk had the other day. He said, listen, our greatest value is going to be by catalyzing an industry shift. And I think what Renaud was talking about with Lending Hub is something that we're starting to see that we did, again, to go back to the generation a bit, we were anti sort of establishment, anti, old people, anti folks in power.
Be nice, be nice, be nice.
But Jeffrey helped us a lot.
Don't be nice. Out there, they like not nice.
But now I think we're starting to see that if you really want to make this larger change that we purport we want to make,
right,
you've got to engage folks that have been there for a long time.
And clearly, from a, as Jeffrey said, as a larger company now, we have to make it okay to have these radical innovators,
right?
Because these radical innovators, I mean, they're not liked by the existing environments, right, that they're in. And there is this cultural aspect that clearly comes from the top leadership of the company, where you have to say, yeah, take care of the existing companies, but I'm also going to take care of these radical things that are going on over here. And the people that do that kind of work are different than the people who are responding to the phone calls at 2 a.m., right, for some issue, versus, hey, I'm out creating a fundamental new product and technology that really will change it.
Right. I think part of successful management is defining things. And you have to sort of define where your company or your process is, whatever you want to call it, begin and end. But I'll bet in every case, y'all have something near to the problem you're attacking that you just think, damn, I wish this would be disrupted. I wish something would change right here. Like maybe in your case, it's education and city government, or how regulation is respected or gamed or whatever. I know I didn't set anybody up, but as best you can, let's go down the line and think about something inside what you're doing where there's something nearby you wish would change, you wish would radically be disrupted. In your case, I'd go with consulting.
Well, no, I'm not. I'm going to go give you a different one.
Oh, okay.
Because there's a guy, there's some people, Vince Cerf and a guy named David Northforth are working on this. They want to disrupt unemployment. And I want to disrupt unemployment too.
Say more.
Well, see, there's an awful lot of talent in the planet that's not getting used very well. And I think we've historically thought of employment as happening from large institutions working outward. I think in this new systems of engagement world, we may be able to create a significant number of jobs, and I expect Casey's part of his world, saying, no, you can create a second income from home. I think the Uber model as a driver, I think the Airbnb model is just the beginning of this possibility. I would like to disrupt unemployment.
Well, in a sense, you're talking about redefining what work is. Work isn't a thing you go to for a set number of hours. It's a continuous thing you partake.
Let me start with work is an income. And these people don't have an income. And it's not good. And if we don't fix it, we're going to have more of a divide, and that's going to be even worse. So I think it's a big deal.
Okay, go ahead.
And I think what you're really, that sort of is a subcategory as we think about it of opportunity writ large. If you talk about disruption, 70% plus of all venture capital in this country goes to 3 states, basically 3 cities, New York, Boston, San Francisco. You can't convince me that 70+% of all the best ideas in America are in 3 metro areas. So if we're actually going to disrupt, right, jobs and unemployment and opportunity, we're going to have to, and Steve Case is saying this right now, there are great arbitrage opportunities in the heart of the country, and he's gotten in a bus and he's driven around there and he's saying, 10% of our fund every year is going to go to these folks. So I think, folks are starting to do the work because they're seeing that this is not just a technological or business issue. These have deep and serious social and political implications that we're going to have to, from the business sector, engage with.
No? What do you want to disrupt?
Well, I think we're so focused on credit, but what's interesting about credit is it touches everything else, right? I think if you can fix credit, you can fix a number of other things. And there's $8,000 on average, $8,000 of credit card debt per household in America. So that's a lot of what people talk about around the kitchen table, and that's a lot of how they manage credit and the cost of that credit is what's going to make the difference between having a little bit of extra money at the end of the month and being able to send their kids to college or not. Outside of consumers, if you look at small businesses, being able to access a small business loan is what's going to make the difference between
also $8,000 in credit card debt at a 17% APR would be like $1,350 a year you're paying to the bank in interest.
That's right. And it typically doesn't even amortize, right? If you pay a monthly payment, monthly minimum payment, you're going to get out of debt after 20 years.
Jeez.
What Lending Club does is helping families to refinance that debt at a lower cost, but also at a fixed rate and with monthly payments, so that in 3 years.
So what's the disruption away from your world that you wish would happen?
So I think it's really sort of everything in sort of beyond credit that we can't handle yet. But there are so many other sort of areas of financial services that also could be made more efficient, where you can take advantage of the sharing economy. You can take advantage of, again, all that psychological change that happened since 2008 and made people more willing to sort of share things that belong to them and share and participate in the sharing economy and really sort of spur more economic activity and more job creation. So credit is one of them. Insurance is another.
Okay, Pat?
And unfortunately, I've spent all my time right down here in the bowels of building infrastructure. Right. And to me, that's I've always been there, and not the guy at the top of the stack, right? But always the guy building the infrastructure. And many years ago, I said my vision is that I would develop a piece of technology that would touch every human on the planet and improve their quality of life in every modality of life, right? Work, learn, sleep, play, right, and everything. And it's this foundational infrastructure. That's sort of what we do, and that's why I enjoy VMware. We're building that, right? And then we enable from that platform all of these other things to be changed and people to build on that platform on a global basis. If I had to say the 3 things that I'd like to see disrupted on top of that right now, right? 2 of them are on stage here, right? Education, right? And finance, and the third would be healthcare. Right? Those are the 3 to me that if we could change those aspects, we would see the substantive, most dramatic shift in the improvement in the quality of life right across the planet.
You don't mention government. Is that just because it's too big a subject to even take on, or?
I see government changes in response to the cultural shifts that occur. And I think if those are changing, government must change to respond.
Yeah. Okay, we have a couple minutes left, so let's do a lightning round. What do you think is a disruption that is currently undersold that is actually very important? Something you personally saw where you thought, wow, why aren't people making more of this thing? This is actually a big deal. Jump ball, didn't mean to stump it.
Well, I'm actually going to say 3D printing.
3D printing.
I'm going to say 3D printing.
Is that big?
Well, I don't know. Because I'm not an expert.
That's cool. Yeah.
But we work in Tupelo, Mississippi, and Tupelo is about 25,000 people, and they're losing about 30% of their youth population every year. They're an old manufacturing town, and now they're trying to get back up to speed. And so the question is, how are so many of these sort of manufacturing hubs in the Rust Belt that are losing not just jobs but losing real population? How can they at least sort of harness the power of technology to have some manufacturing base, although it's not going to be as robust as it used to be. Maybe 3D printing, maybe not, but I think it's at least interesting enough to explore.
So, and part of what you're saying there is 3D printing in non-obvious places.
Sure.
Yeah. Okay. Jeffrey, you had an
No, machine learning was the one that, it's just such a big, it's a little bit vague, but I just think we're going to rethink everything by virtue of looking at the digital exhaust and reading the tea leaves of the digital exhaust and seeing patterns. I don't even know quite what that's going to change. And we've seen it happen a little bit in retail, a little bit in advertising, but it feels like it can change everything.
So do you tell all the young people you meet to study more statistics?
Well, I'm a liberal arts guy, please.
I know that.
I want them to learn the
sad,
narrative.
but
You learn the narrative. No, yeah, no. But then you have to tell stories about what these things tell you.
Yeah.
Yeah.
I'll be more mundane, but with I think electric cars is something absolutely amazing.
I'm sorry, what was that?
Electric cars. I mean,
Electric cars.
Yeah, I'm a convert Tesla owner, and it's quite amazing. I'm surprised that there aren't more electric cars on the road, considering the impact on the environment.
Well, it's only been a couple of years, so give it time. But
It turns out the batteries in Michigan have only about half their power.
because of the cold?
Yeah, cold weather's bad for a battery.
Okay.
Something.
So it's a California thing.
Yeah. Yeah. Obviously, I think mobile cloud is going to continue to just have this disruptive platform into every industry on the planet. The one that
So
probably
big and hyped as it is, it's still.
Oh yeah, it is coming across every aspect of
Yeah.
IT. Because if you think about, we have $2+ trillion of IT. The large majority of it has yet to be touched, right? As a result of that, and so that's going to be dramatic. And if I had to pick one industry that I'm most disappointed with, it'd be healthcare, largely held back by regulatory or cost effects that don't allow it to be, the quality of life improvements that could be delivered if we took the top tier healthcare.
Well, also very few players in healthcare who have an interest in changing.
Yeah, there's so many economic, structural, regulatory, governmental, geographic
Makes
issues.
it tough. All right, well, I think that's all we have time for. Please give a hand to our panelists. We'll move along.